Hello guys, welcome guys to oh my god, seems like we don't have the chat here. For some reason I just changed it the way it's supposed to be. Let me see if I can fix that for you guys. So- oh man, this is just not working out for me. So I don't know what's going on here. Maybe just well, we were supposed to have you guys here on the charts, but instead of that, I don't know why I have a different perspective there. So let's see, maybe I can get you guys up in here. But guys, thank you so much for joining chapter number 2. Basically, oscillators. By the way, guys, this is gonna be just a basic overview, right? So this is just scrapping the surface. So in next episodes, we're gonna be going in depth on oscillators and indicators. But at this time, we're just gonna be watching what seems to be just a way to complement our trading session, right? So let me see if I can get you guys in here. Let me see if I can fix that. Then we can get going. I don't know why I cannot see the rest of it, but whatever. Let's see. There we go. I think, hey, perfect. I got you guys. Nice, nice. So let me get a shout out here to Trade Intuition, first one in the chat. Thank you so much, Trade Intuition, for being first and also being on the class's username. Of course, my partner in crime. What's up, username? Great to have you here. Also second, Alexander G said third, Alexander G, Queen Mode. Welcome. Great to have you here. Jay Violet. Hey, what's up? Very glad that you are here. I know it's ultra late for you. Thank you so much for your support and also staying around. Who else we got in the chat? We have Jay Violet, username JR. What is up, brother? Welcome. Hopefully you are enjoying the indicators. Let me know how that goes. Also, if you have any questions, please let me know right here also in the side chat or in the Pirate Academy. We want to get you. Hey, KDGT, what is up? Also, Violet, JR, and I think that's all that we have right now on the chat for now. Hopefully, guys, if you can share it, that really helps me. Also, if you want to share and click that like button, that also will be super cool. So, by the way, if you know, you know, but no longer a mattress in the floor. That was hilarious. By the way, that is a sofa. It was a sofa that just was basically just poking out of at the back of my camera there. But yeah, let's get it rolling, guys, and let's see how are we standing on our trade setups, and also how can we maybe start adding the oscillators on our trade session. So let's get it going. Okay, DGT, thank you so much for that comment. I also could be saying it over and over and over. Just give me reasons, I'll do it. All right, so let's get it. Let's see what we have in here. At this point, it seems like I'm behind in here. All right, perfect. I think that I got it fixed. All right, perfect. So at this point, this is where we stood at. Remember, we already have gone through support, resistances, trend lines, microstructure, interstructure, or microstructure, right? We also have called it DNA of the asset, basically what it likes to do in the structure, what is repetitive. Also, we talked about patterns, breakout patterns, and candlestick patterns, how the candlestick also work. And based on that, we created chapter number 1, naked charts. All right, so basically trading with no indicators, just knowing 101 of trading, right? Let me give you guys a quick introduction here. This is something special. So if I could just only one indicator, I would add an AI oscillator. This is because on my perspective, it simplifies data and give you an overall direction. A little secret there, all of the indicators, or many of the indicators out there, or sorry, oscillators out there, are based on volume, or some kind of volume involvement. Like for example, if we talk about the RSI, well, we're gonna be talking about momentum. That is a momentum indicator, which you get momentum, well, it's just like in real life. Basic overview involves volume. All right, so just so you know, guys, right there. So basically, it's just transforming volume into something that we can easily understand and read. All right, so let's get started and do a quick overview and use the tools that we have right on basic setups. Ethereum, all right? Fidelity Ethereum, F Ethereum. Basically, breakout retest. Off we go, going back to retest support, right? And we're forming, as we were talking about before, right? That a little pole. This is the part of the patterns that we were talking about, right? Remember, we are forming this one here, and this looks both like either a miniature symmetrical triangle, and also maybe if we really want to see it, a bullish pennant. Let me give you guys a perspective view here. Since we already have this, right? A symmetrical triangle doesn't always needs to be symmetrical, but as long as it has this overall shape. A bullish pennant usually has a long pole, right? And then something like a symmetrical triangle, right? If we have something like this, well, then we're going to be considering this a symmetrical triangle and not a bullish pennant. Nonetheless, it doesn't really matter, right? I mean, at the end of it all, what we're looking at here, it is the inner structure, right? And remember, when we're trading patterns, the gold is on the breakout lines, right? So just to have a point of reference, what's happening here. So whatever you want to call it, it really doesn't matter. If you really want to be very technical, let's call it a symmetrical triangle. So at this point, remember that we talked about maybe going into lower time frames to start having a little bit more of a setup here. So let's go to something like the 15 minutes. At this point, we can see a ginormous triangle with a very well-defined support, and you'll see that this support makes a little change. Guys, just so you know, and maybe this is going to be the case, sometimes in lower time frames, right? We're gonna be just being very, very precise, and then when we change of time frame, well, then we'll see that sometimes it doesn't fit quite as nicely. That it has to do on how we group candles per time frame, right? And sometimes it's gonna be just slightly off. So some drifting there. Again, remember, you don't need to be absolutely perfect, just as long as you have the overall idea and you know what to expect and where to expect it, right? So let's go back to 4 hours to see if that changed a little bit. But in this case, look at this. We are not hitting this candle, right? So I'm telling you, you don't need to be perfect. And if we go to the 12 minutes, you'll see that we are hitting it right here, like perfectly, right? So you see how we have some more little no coherence between one another. Don't worry, it will happen on the way that they calculate candles, so no big deal. What else we got here? So let's get started, and I'm gonna be choosing from all of the oscillators. Today I want to talk about the RSI, right? That's simple. Also, tomorrow we're gonna be talking about MACD, just so we don't encase ourselves into just one indicator or one oscillator. And we're gonna be showing you, or I'm gonna be showing you how I use it, and also what its overall spectrum for playing with it, right? So one of the main, don't tell me that I'm freezing. All right, I am not. Perfect. One of the main things of the RSI, it is that its name is a relative strength index. What does it tell you, or what does it mean? It is basically a relative strength index, right, which measure momentum. We don't really need to see what's up in there. We only need to understand how it works, right? The index overbought and oversold, or index shows you overbought and oversold. We're gonna be seeing it in a minute. The RSI above 70, right, which is a threshold. We're gonna be talking about threshold. What is a threshold? It's just basically a gap or a point of reference in where we have a slack of movement, right? So when we are above 70, the asset is overbought, right? Maybe indicate a pullback or a correction, or a slight movement to the opposite. So since we are above, well, then we're expecting a retracement back downwards, right? The RSI below 30 is usually the other way around, right? Is oversold and maybe indicate a rebound or a rally. Again, that depends on the time frame that you're looking for, the size of the movement, right? We can also get divergences, and right now, let me tell you that divergence is a little bit of a loose concept, all right? We will be digging deeper into a divergence in the future. But just for now, a divergence is just a disparity between the price action and your oscillator, whatever oscillator, right? So you can have volume divergence, you can have RSI divergence, which is momentum divergence, right? You could have MACD divergences, you could have money flow divergences, and any kind of divergences that you might imagine, right? Just for reference, when you have your oscillator going downwards and your price action going upwards, that is a bearish divergence. The other way around, when your oscillator is going upwards and your price action is going downwards, you have a bullish divergence. So, AG, not. Oh, I see. Thank you. Username. Well, username FE. Love it, guys. I really appreciate it. Read chat, by the way. Read chat. Let's see what else we got here. Am I missing something, guys? Please let me know. Oh, I love the hashtag Ethereum. Fidelity Ethereum, by the way, guys, that you don't know, right? I feel like OC is talking to me when he speaks in the camera. Hey, yesterday, I am talking to you, my friend. Who else am I going to be speaking to? A camera? No, of course not. I'm looking through it. Just kidding you. Great that you're here, my friend. Really appreciate it. Thank you so much for participating and staying around. So, but yeah, let's see. Basically, let's just add our indicators right down here, right? Let's go for our RSI. So to add your RSI or your indicator, we're gonna go in indicators because you need to know that a oscillator, it's kind of like an indicator. It's an indicator, but it kind of like has its own, I don't know, its own special place, right? Usually when we think on indicators, we usually think on things that go in the price action area, right? And then when we call for an oscillator, which is kind of like a different breed of indicators, we usually think of having it at the bottom or sideways, basically not mixing in the price action area. So let's go ahead and just click indicators. You don't need to be in anything here. Just go to search and do RSI, right? So here we go. You're gonna be seeing that I have favored the chart prime. We're gonna be using that in the future, in fact today. But at this point, I just want to do the technicals one. So let's see, where is it? Relative strength index. So just click it, and here we go. We had it. All right. Let's go over the settings just so we have a basic idea of what we're looking at. By the way, you'll see right away, remember when I told you guys that above 70 and below 30, right? You'll see a purple box in here, right? With, guess what? A median. Median always there present in any kind of box or shape, right? And then you'll see right here to my right, you will see number 70, right? And then you'll see again to my right below here a number 30. So basically, when we are above 70, look at how this signal line, right, get filled with, guess what, color green, right? And let's mark it with our marking to a vertical line. Since we start breaking above the 70, right, and since we start breaking below the 70, you'll see that despite that we did not cut the very bottom, right, this area of oversold, well, indicated a possible reversal. This is important to note how this works, right? Not because something is overbought or oversold means that it's gonna be immediately reversing, because as you can see, as long as we are keep making overbought or oversold areas, we can keep moving into the direction that we are currently moving. And after, look at that, when we are breaking down, that's when we have the actual movement, right? Not because we've been a long time here means that we're gonna have such a deeper movement. No, but it's telling you that we are having an overbought or oversold area, all right? So basically you can start looking for reversal signals here. Another important thing is that where we are at top and then we start losing the zero line, look at how we bunched up at the center, all right? Usually bunching up at the center indicates ranging, all right? Especially when the main EMA, we're gonna be seeing this line in here, it is also going back and forth, back and forth, back and forth, being stable right there, right? What we have right here a ranging zone, right? Maybe a little bit sloping down range, but nonetheless range. Hey Harp, what is up, my friend? Welcome. Range Toaster, what is up, guys? Welcome. Thank you so much for joining me, guys. Please take a seat and make yourself at home. So guys, welcome. Another important thing is that we're gonna be looking for sharp reversals. Usually those sharp reversals along resistances or supports are gonna be giving you guys some hint on where to enter. For example, right here, maybe at the candle close on reversal, right? Maybe we can start taking a trade in here till, look at that, the next sharp point when we start seeing a couple of green candles. So maybe TP number 1, right? And then moving your stop to entry. That will be a basic overview on how to use it. Another important thing, it is just like any other oscillator that does have a zero line or a reference point. When we're above that zero line or that reference point, we can start thinking on up ranging movements, all right? And when we are below that zero line or reference point, we can start thinking on ranging downwards movement. This is not what I'll be calling a trend, but this is what I'll be calling a constant moving upwards within the major or the bigger pattern, all right? This is the 12 minutes. I usually use it on the 4 hours. For me, 4 hours makes much more sense, right? Let's go into the settings now and start playing around with it a little bit. Okay, the RSI length. Basically, what this is gonna be doing, it is giving you a length between measurements and also smoothing out this signal line. Let's just try to do something like 25. Click away, wait for that little eye to stop moving, and let's see the results. Let's go back to 14, and you see the difference that we have between those two. Let's go back to 25, click away. All right, we're gonna be seeing a smooth out factor. So let's even do something more dramatic. Let's do 10. All right, you see that? More dramatic reactions, right? Then something like 30. Less of a dramatic reaction. My advice, either leave it as is or change your RSI length based on the movement that you want to see. For example, right here, I see some top out movements, some areas of big retracement, and some areas of push up, right? So I'm gonna be marking those with these lines in here. So let me add it here, from here to there. Then when we started here, right? Maybe some other areas that kind of are interesting to me, or maybe I can maybe start looking for taking or exiting some trades, right? There we go. I think that is good enough just for this example. Now what I'm gonna be doing here, I'm gonna go to the settings here and start adjusting the RSI length to give me overbought, oversold areas that matches what I'm seeing. Maybe I could be going lower. I do usually advise going in 10 increments in here. One second. There we go. Thank you for that. All right. So at this point, we can start adding and reducing those numbers. And look at that. Just like that, just by changing 10 increments, now I see a very dramatic reaction here. Getting back down, look at that, just scraping the top, right? Maybe I'll be even willing to change it a little bit. I would not be changing this too much. Why? Because the RSI usually have a standard value, and well, most of the people use it and see it that other way. So if you're gonna be really experimenting with this, I would suggest adding another inside of your RSI, keeping one as is, right, just for reference, and then adding the second one with whatever assets you want to see. Now we also can see the SMA in here. The SMA is just basically this line that it give you a reference to cross over. Another way, talking about the SMA, another way to trade with, there we go, our RSI is through the crossovers between the SMA and the RSI signal, right? When we have too much noise crossing over and over and over, we can assume micro ranging, and when we start seeing those breakouts to the upside, well, we can start considering micro bullish or micro bearish trends. All right, that way you can start taking those trades even if you're not oversold or overbought. One little bit of advice in here, and this is based on experience, so your mileage might vary. It is trying to get those crossovers as we are coming out of the overbought zone, and then sticking with the direction and your TA on your screen. All right, we're gonna be diving on it for a little while, so let's remove everything and let's now give you something that I really like. Let's add now the RSI prime. I got it right here. Let me give you an idea of what we have done in here. So what if instead of point pair RSI, we give you 4 times the data right there? So basically, instead of just closing value, we give you opening order, right, mid closing order, and extensions, right? So basically 2 at the top, 2 values at the bottom. So for representing that data, we already chart that data, and we chart it with candles. All right, and just move out of the way. There we go. And if you remember, a candlestick shows you for a bullish candle opening price, right, closing price, the shadow or wick up to, right, where the price got to, and the lower shadow wick down to where it went all the way down and did not hold it, right? So basically give you 2 points of information at the top, 2 points of information at the bottom. Also, we can start making some TA if we are able to translate a RSI flatline into candle patterns. So how can we do that? Let's go ahead and remove this one. Let's go to indicators, and then on the search bar, because this is a free indicator, you can do RSI primed. There we go, by chart prime. Just click it once, wait for a second, and we're gonna be having it this way. I usually use it the way it is, right? Just if you remember here, we talked about engulfing candles, right? We also talked about three white soldiers and 3 black crows, right? We talked about a couple of candlestick patterns, and within them, look at that, we are showing you when we have engulfing candles, right? So when we have an engulfing candle at the 70 mark, right, well then, guess what are we expecting? Now we can not only have candlestick pattern analysis, but also we can do trends, right? It's not about your breakout, it's about your retest, and off we go, right? Spreading it from here to there, right? Or maybe look at this trend, this beautiful trend going all the way down. Where do we end up the trend? Right here, breakout retest, taking your profit, right? There we go, by shorting the whole thing. So you can start seeing right now that we can go as complicated or as simple as you want, but having this amount of data right now, I think it makes for a great oscillator. Guys, let me tell you something. When we're talking about candlestick patterns or candlesticks in general, you'll see that up here we have a setup of candles, right? If I just click the roll down menu, you see that I have just candles, regular candles, and also we have high kinetic. Just so you know, I don't like to use high kinetic, and that is because it doesn't give you real price data. It is very good to show you trends which make things much more easy to understand. Let me show it to you. There we go. Right? And that becomes, look at that, very easy to just follow the red and the green. But as we have shown, it doesn't represent real price value. We're not going to be explaining how high kinetic candles calculate price action because this is not part of today's chapter. But just so you understand, high kinetic candles give you a much easier time finding trends, all right, and trend shifting. Hey, Ada Ace, what's up, my friend? Welcome. Crypto Billy in the house. What is up, my friend? Welcome. Really appreciate you guys being here. So let's get, hey, Uncle Jesse, I don't know if I shout you out, my friend, but there we go. Uncle Jesse and French Toaster in the house. Welcome. All right. So what I'm going to be doing here is adding or trying to add that benefit. Guys, don't remember that you don't need to follow what I do, right? I'm just giving you guys the options, right? And you can stay with basically just trends. Look at that. We can measure trends, right? And then trend breakout, retest, right? What's happening? Hey, we also have a breakout, retest, and then what's off we go. Look at that. We're having some doji candles all the way down here, and also some doji candles here, so we can take the trade in here, call out the trade right before we have the breakout retest right there, right? So you'll have a ton of things to look for if you like. But here's my deal. Let's click the gear icon. On style, you'll see candles with patterns, right? We also have just regular candles. We have high Kinashi or the regular line. So let's go for the high Kinashi, right? There we go. Much better. Now, the length, I usually don't change the length. And the smoothing, I also don't change the smoothing, right? Do we have an auto EMA? Yes, and this is the yellow EMA. Crossover, remember we can also use it now that we have high Kinashi, which has a smoothing factor. Look at now how things get much smoother, right? So now we don't need to start drawing trend lines because the change of color, which basically will tell you basically when it's time to start looking for a short, looking for a long, and give you an overall perspective on what to do up next. All right, we have Melissa in the house. Welcome, Melissa. Great to have you here. Hopefully you're having a great day. All right, so for me, this is going to be one of my favorite indicators. By the way, if you don't like the RSI Prime, don't worry. There's a million more indicators and oscillators that you can use. And also, I want to give you guys a set of heads up in here. Before I discovered Chart Prime, I used to use other kind of oscillators. Let me give you the heads up on those oscillators and how I combine them and how they worked. All right. So for me, I'm gonna go to indicators. There are 3 indicators, right? And this is let me search it here. It is by Lazy Beer, the squeeze momentum indicator. Here you go, squeeze momentum, right? And then I'm gonna be adding something else, right? But before we add that else, let's just take a look at what's happening here, right? We have a set of very nice waves. Also, look at that. We have a reference point. I don't know, guys, if you have noticed, there is a theme in here, right? Reference on an indicator usually makes for a good indicator, right? Usually having a reference point built into your indicator talks about how the caller understand what he is doing, and most likely they're gonna be giving it to you, right? So you can decide for yourself how is it going, or how much is it drifting. Basically, it is one of many signals that you are using a quality indicator, right? So at this point, we'll see that we have a very clear division. Let's just use this wave in here, right? As you can see, we have bright red, right, and shaded red. So basically, this downward movement has 2 areas of resistance or 2 areas of division, right? The same goes with the green one, right? We have bright green and also we have shaded green. What does that mean, and how does that compare to the price action? Well, this is very you can vary it on how you use it, but as long as we're green, we're bullish. All right, as long as we're green, we're bullish, but we have strength with bullish, right, and the bullish net losing strength. Usually when I'm looking for the trend to trade, I try to get, for example, for a short, I try to get when the bullish is losing strength all the way till the bearish is losing strength. Why? Bearish means going downwards. If going downwards losing strength, what does that mean? Losing strength on the bearishness means bouncing up. That doesn't mean trend shiftment. It only means that the bearishness is losing strength. So what's the opposite of bearish? Bullish. Pullback. All right. So when I'm trying to get a long, I don't try to get it from here. I try to get it from here and ride it all the way till here. Does that make sense? Please let me know, right? So this is a different area on how you could be using this, right? This is a squeeze momentum indicator, but for my perspective, this is missing something. Remember that the RSI had also a perspective view. I mean, yes, we have the zero line, right? But also adds an EMA or an MA, right? That usually is given because the MA, it is a measurement of whatever candles, depending on the size of the MA. So 15 MA is going to be the 15 candles, right? From the one that you're seeing backwards. And they're going to be averaging down that price action. All right. So I'm not looking at this point to have an average down. Right? I might be looking for an index of momentum, or better yet, strength. All right. Can anybody tells me a strength indicator? Well, I can tell you one. Directional movement index, which is not the one that I'm looking specifically, but has an ADX reference point, right? Let's add this DMI. So this is used classically, right, with your reference point, right, your signal line in here, right, and also you have two different references here. Usually the way that you use it is by crossing over, right, strength, and also referring it back to your signal line. Since I already have, and let me just minimize this one, since in this strategy I already have bullish and bearish patterns, I only need the strength relationship, right? So I'm gonna be going to the settings in here, and I'm not gonna be using either the plus DI, neither the negative DI. I will, however, be using my reference line in here because I'm gonna be pairing it with something else. We'll see. Another thing that I usually do is change this line to white, make it bright, and give it a strength color, strength thickness, right? That is it. Remember at the beginning of this class that I told you guys that usually when we talk about oscillators, when we talk about indicators, we usually think in things that are happening here. And then when we talk about oscillators, we think into indicators, but that they have their own little spot, usually at the bottom, right? You can also put it at the top, or I've seen that you guys also put it to your right, which, guys, that blows my mind. Looks amazing. You can reference different oscillators that way, but I just don't use it this way, right? But I'm here to tell you that that is not the only way. For example, what happens if I click this button right here, just so I can grab and drag and grab? I'm gonna be going over this strength line, right? And then when I see the little hand, I'm gonna click, hold it, look at the little hand going, squishing it, go over my squeeze momentum indicator and release. Now they are both combined. You see that? So let me double click to my right, and to my right I can adjust my squeeze momentum, and to my left I can double click it or adjust my strength. All right, here we see you should drop these indicators in Piper Academy. Get gen sec the attract traffic. Maybe, yeah, absolutely, absolutely. I mean, I'm trying to give you alpha here, of course, so we can build up on top of it, but absolutely, I think I don't see why not, right? Now, let me show you how one might not be referenced one to another. That's why I'm using my reference line, right? The center line, the zero line. It's not the zero line because it doesn't represent zero, but you get the point, right? And I'm gonna be grabbing it and matching it as the best of my capabilities right here on top of the other one. So one is matching the other. You don't need to be perfect. I think that's good enough, right? And then of course I want to make it fit onto my screen. So let's just center things off in here. There we go, right? And let's also make it a little smaller. Nice. All right, so how do you read this? Very simple. Let's see. And there's a little bit of confusion. We're gonna go into this, but let's see what each of those indicators tells me. Remember, red for bearish, but that bearish has a very bearish and loss of bearishness, right? Usually I try to trade this for a bullish movement, right? But here's the thing. If, let's just analyze, for example, this part in here. If the line, remember that the line, this is where most of the people get it wrong, all right? So pay attention to this one. So I can also shut things down here, right? Whatever, let's just do it. If the line is pushing up, especially above your reference line, right? Just like any oscillator, as we learned before, we do what, right? We do what? We do whatever your indicator is doing. So remember, ADX, it is the strength indicator. So if we're above of the zero line pointing upwards, we do have strength, right? Because that is what that indicator is pointing at. We do have strength. So when we are below our reference point, especially pointing down, we do not what? We do not have whatever the indicator is pointing at you. This is a strength indicator, so we do not have strength, all right? This is important, guys, because part of this is setting the perspective on how you're gonna be reading the indicator, all right? So let me clear this up and let's go back and turn on the squeeze momentum, all right? If I know, and let's not talk about, let's just make it bigger, right? So we don't lose the sight of what we're talking about here, all right? Let's focus on this area right here, all right? This area right here. All right, now that we know which area we're gonna be focusing, all right, I know I am bearish, right? Since this point on, I'm bearish. But the actual movement start when the bullish start losing strength, right? All right, or losing bullishness, all right? But since the red, remember red is bearish, I am bearish, I am bearish, I'm still bearish, I'm still bearish, I'm still bearish. But bearish plus strength up means that the bearishness have strength, meaning going down on price action, all right? Now, I see a shift of trending here, right? Remember, bearish trend also loses its bearishness. But guess what? I do still have strength even when all the way till here. And I'm looking for the pivot of the strengthness, all right? So I do have strength even in this bearishness. I'm still bearish. I'm still bearish with strength, all right? What happens here? There's two options. either going downwards because I'm still bearish and I have strength in the bearishness, but also I know the bearishness is being reduced, right? So I either go down or range. All right? So what happens when I lose strength on the bearishness? Bullish bounce to the upside. You see that? Hey, Week 5, what is up? Welcome. Retro Mike, also in the house? Retro Mike Tech? I don't see you, my friend. Welcome. Bullish, bearish OC. Hey, I see you, my friend. Welcome. All right. So, let's continue. This is the key of this other indicator, all right? So, I don't have strength, or I'm losing strength on whatever the color is it. Like, for example, right here. Let's analyze. Flipping downwards on the strength is losing strength until I push upwards on the strength. So, losing strength on the bullish movement. That is, losing strength on the bullish movement, they cancel each other. So, range, because I'm still bullish or slightly ranging up, right? Why? Because I'm bullish, I'm increasing my bullishness, but losing the strength of it. All right? What happens when I'm losing the bullishness? And also, look at that, I'm still going downwards from this point, slightly up and then downwards. So from here all the way down here, I'm losing, or better yet, from here to there, I'm losing not only strength on the bullishness, but that bullishness is also being lost. So I could be assuming going down. All right? Important key factors in here. Pointing down on a bearish trend, on a losing bearish strength, usually it is a bullish bounce out of a bearish trend. We'll see. Let's take a look at that on our indicators here on our price action. Let's go to something. Let's handpick a couple of indicators or a couple of zones so we can understand it better, right? So look at that. Increase of strength of what? Of the bearishness. So let's mark those areas here. Where did I flip? I flip here, right? Where did I start getting some strength? I got it here. Where did I start flipping from bullish to bearish? From here. So I try to take the trade within this area here as the strength goes down and then up. Why? Because on bullish, when I'm trying to get a short on a bullish trend, I want to decrease the strength. Does that make sense? Losing strength on a bullish scenario, going downwards. All right? Going downwards on a bearish scenario, gaining strength, more bearish. Right? So, just look at your line as increase or decrease, and then read your oscillator. All right? Perfect. So let me clear this up, and let's go for one of the patterns that I'm looking for. At this point, I'm tipping over the bearishness, or I'm losing bearishness in here, right? So I'm not taking the long until the bearishness loses strength. You see? When does that happen? And I'm talking about the white line, right? The white line. When does it tips over? Right there. And I'm losing, or I'm getting less bearish, and I'm losing the strength on the bearish. So what happens? Bullish bounce. Did it went to Valhalla? Of course not, because we are still within the major trend. This is inner trend trading. All right? So that's what we got. Let's start now putting into practice. All right? Let's get some setups in here, guys. Please let me know what asset would you like to like me to take a look at, and we'll get some practice out of what we learned today out of these two indicators. By the way, if I had to choose between this setup of these indicators and the RSI prime, I would go for RSI prime. Let me show you why. Because RSI prime is just straightforward. I'm just looking for tip off with small candles. Easy peasy. I don't need to look at strength. I don't need to look at bearish or bullish. I don't need to learn direction, anything, right? I'm just looking for that itty bitty tiny candle and change of color, and that's it, right? Itty bitty at the top, of course, and at the bottom. At the bottom, look at that itty bitty tiny candle, and then we change of direction, right? Also remember what is your macro trend and what is the structure. That is always very, very important. All right. Oh, all right. So it's well, it's almost 8 p.m. We're about to finish the setup, so let's go and do some analysis here for the rest of the show. All right. So basically, what we got here, look at that, losing strength on the bullishness. What is supposed to come along? We are supposed to come along with the red wave here, right? So what we want to is going to be waiting for a red something like this to happen here, and when we start tipping over, and then we also lose strength, that's going to be our entry for a long. All right, it's been a long time here, so we need to be a little bit careful here. When do we enter? Look at it, we already have the flipping here with a tiny candle. We're making a bearish pennant. Be careful with this bearish pennant, right? Usually that bearish pennant tends to break below. We're going to be waiting for some areas in here with tiny candles, right, to be at support and then jump in. As you can see, both of our oscillators do its job very nicely. Something that you need to understand, especially on this setup, is you need to front run these indicators, all right? So you need to be careful on that one. Let's go and take a look at Kava. The Kava. We talked about this possible trading here. As you can see, it went basically downwards, so we did not took any entries at this point just now. Let me just clear this up, all right? And let's use our oscillators. Oh, look at that. We are having tiny candles almost flip, right? Look at that, losing strength on the bearishness. So where should we have entered? Yeah, are we still on entry? Yes. What is the price expectation? Do we know? What is the price expectation here? We don't have strength, so we are expecting to go up for a reversal and a continuation down, right? This is the price expectation that we have. Just like this, right? There we go. So how are we going to be getting up? Well then, we already have our entry set up in here because this is an important area of support. So again, we just keep on our toes in here. And what else could we be doing? Maybe adding another support resistance. Let's manually do this, right, with horizontals. Here we go. We look at this area, this area, this area, this area, this other one, this other one. So I think a good resistance is going to be somewhere around here. Maybe overshoot slightly above. I would say it's somewhere around here. It looks okay. Still would not be that confident on this area, but I will be looking for a possible entry for a short somewhere around here as I continue downwards. All right, so I will be looking for that short after the little pumping here. All right, let's take a look at TRX. All right, perfect. TRX is actually playing out as we expected. You see the area of ranging zones. Why? Because we identify an order block position based on two close support resistances. So we just bounce between those. And what are we expecting here? Maybe some double trigger wave like this one, right? To after having that little range, going back, sweep of the lows, right? Look at that. Going for a strong support. Remember, that's what we're looking for a long. When are we going to be executing the long? As we start losing bearishness and we start what? Here going downwards, and then when we start going up in green, we want to see this thing pushing upwards, right? Easy peasy. just look at your RSI. Remember, we're looking for tiny candles and reversal areas at support. There we go. Whichever floats your boat at this point. Let's just wrap it up with TAO. Let's see what we have in here. TAO. Let me zoom in here. There we go. And we basically don't have a trade. Well, we did, in fact. Look at that sweep of the lows. There we go. Nice. What happened here? In fact, it was the one that we talked about, the short and long in here. Remember that? Remember that gold is in the breakout lines. Also, we talked about the fake out here. So we enter here. Perfect. Take profits. Oh, look at that. Breakout. All right. You start taking TP number 1 based on your area of resistance. Move your stop to entry. Close in one single candle. Stop us out. That is fine because basically we already have taken profits. Move our stop to entry. So this is gone. And then what? It's not about your breakout. It's about your retest. We've been retesting. What do we need to see? We need to see once again definition of our RSI. For example, right here, we are still red. There's no long entry. When are we going to be looking for a long entry? When we start changing colors. When we have start changing colors. Of course, tiny candles at the bottom. So far, there's no entry until we get here. Right here, no long entry until what? Until we start seeing the shaded red. And what on the shaded red? Keep going downwards. All right. Then when we go to the green, we want to go upwards, right? Just a little heads up in here what we are going to be looking at. It is time to go, guys. Thank you so much for joining, and as always, see you guys tomorrow. Hopefully, guys, have a great night. Tomorrow we're going to be taking a look at MACD, right? Just to wrap things up and then move to the next chapter. Guys, thank you so much. And as I said, see you guys tomorrow.